Cotton. It was Curly. He was the Three Stooges. Cotton. With us, Darren Hudson from Lubbock, Texas, and Texas Tech. Darren, let's start. What's the #1 thing we most get wrong about cotton? What's the thing that me and my viewers get most wrong when we think about our cotton in our shirts?
Well, the cotton content is really pretty a small percentage of your overall price of your product. So when we look at prices moving around, people tend to think that that 35% increase in your apparel price is due to cotton, and it is part of that, but there's a lot of wage rates and regulatory costs and everything else that go into it. So I think just the share of the overall dollar is probably the most important thing.
Let's bring up a chart here that Dr. Hudson knows well, folks. This is cotton. It looks like a lot of these other more obscure charts. Cotton, very low stocks to use. What does that mean, Darren, when you guys say stocks to use? Why are you concerned about that phrase when you talk about cotton?
Well, the stocks to use just reflects the overall level of available supply out there at any given point in time relative to how much is being used. And what we've seen is a dwindling stocks over time, and that's led to these tight supplies that we have in all the other commodities. And overall, what we do is we're getting to the point where we don't have enough cotton to really operate mills out through until the next harvest. So people get real concerned about tight supplies, and that drives up the prices as people do some panic buying.
For a youngster from the Northeast, this is great video we're showing here, Darren, of the cotton fields. How much of cotton and other commodities is a knock-on from higher oil prices and the interesting dynamics with corn? How much is ethanol affecting these other commodities?
Well, it's hard to quantify directly, but it's obviously having an impact because we have a sort of a fixed land base out there. And as land gets diverted into corn for its higher price because of ethanol, it's taking away from these other commodities. And especially when you get in areas like the Mid-South, the Mississippi Delta, Tennessee, Arkansas, the Southeast, where they have enough water to be able to grow corn, cotton, soybeans, any of those crops. The corn takeaway has really had an impact, and roughly in Mississippi alone, from 2005 to 2009 is a 67% drop in cotton acres.
Here's a great chart, folks. Darren, it's an elegant chart. The unstoppable trend towards alternatives. That's Wall Street talk for commodities. And you can see the Goldman Sachs Commodity Index surging up again near the '08 highs. And that yellow line is equity investments. From where you sit in academics, Darren Hudson, would you overweight commodities now versus other investments? Can this boom continue?
I would be a little concerned going forward in commodity prices. I think some of your earlier guests have pointed to, the retrenchment that's occurred. Obviously, commodities make a great hedge against inflation. It's that first level inflation indicator. We've seen some of that lately. But going forward, commodity prices tend to be very interest rate sensitive. So as interest rates rise, we tend to see a decline in commodity prices. So to the extent that the Fed may take action on inflation going forward, you're certainly going to see that hit in commodity prices.
What are land prices doing in the land of cotton? I mean, if that's the core commodity, what is land doing?
Well, we've seen some increases in land values. Cotton lagged behind most of the other commodities. So the southern tier of states is lagging behind in terms of the increase in land values. Of course, Iowa, Illinois, places like that saw dramatic increases as corn prices went up. Cotton lagged behind, but certainly a lot of this added income is getting capitalized into cash rents and land values.
I mean, you look at this, and what's your personal take then on inflation? If our theme this hour is inflation, what is your basic take on this style or kind of inflation that we're in now? Is it like the 70s, or is it something new?
Well, I think it's a combination of both. One of the things, an earlier guest pointed to was the low inflation rate in the U.S., which is true. When you talk about inflation, less volatile food and energy, the inflation rate's pretty low. But we've seen a pretty steady upward trend in these basic commodity prices. That gets baked into the pie. It doesn't show up till later, but it's real. And so the inflation rate, I would anticipate going forward, is going to increase. especially if we continue along the lines with these commodity prices. And there's really no sign, unless we just get a huge surge in interest rates, that these commodity prices are going to go south anytime soon.
All right, Dr. Hudson, thank you so much, folks. Darren Hudson of Texas Tech, Lubbock, Texas.